Welcome to Resilience and Resolve with Lance Drury.
Welcome to Resilience and Resolve with Lance Drury, the show that helps individuals and small business owners fight back when the IRS comes calling. Lance Drury is a seasoned tax attorney who's been defending clients for over 20 years with one goal in mind: protecting what matters most. I'm your host, Heidi Mack, and today we're talking about tax planning when you're already in trouble. Most tax advice is for people trying to avoid problems, but what if you're already behind? You owe the IRS, haven't filed, or just feel buried. This episode is tax planning for people who've already fallen behind. Thanks for joining us, Lance. We always appreciate you being here.
It's always a pleasure, Heidi. It's great to see you again.
Thank you so much for always giving us your information. So let's start it off here. When somebody already owes the IRS or has unfiled returns, is it still possible to make a solid plan for the future?
It is, but the first thing that you have to do is to become compliant with the IRS. And that means you have to, if you're self employed, you have to start making estimated tax payments. A lot of self employed people don't make those estimated tax payments. The IRS is going to require that for you to become compliant. And so you have to continue to make your tax payments from this day forward on time, every time. And you have to file all those unfiled returns at least the last 6 years in order to be compliant with the IRS. Because the IRS, if you have debt on the books, is not going to negotiate a settlement with you if you have unfiled returns and if you're self employed, if you're not making those estimated tax payments. Because the last thing they want to do is give you an agreement and then you're not compliant moving forward. They're just not going to do it. You're never going to be able to get an agreement with them.
Are there common mistakes that people do when they're trying to dig themselves out?
Yeah, I think one of the biggest ones is though they think, well, and this is self-employed people. This is the biggest mistake that self-employed people make. They have this liability. They think they can do it on their own. They don't want to get levied, so they call the IRS and they set up an agreement. And they're paying on that agreement, what, $1,000 a month or whatever. But then they don't have enough money left over to make their estimated tax payments. So then the problem is when the tax becomes due, they can't pay it. The liability pyramids, and it just gets bigger and bigger.
Mhm.
So the biggest mistake they make is what you want to do if you're self employed, you haven't made estimated tax payments in the past. You want to start making the estimated tax payments first before you call the IRS, before you set up an agreement. And why is that? Because those estimated tax payments are an allowable expense in determining your ability to pay on the back taxes. So
Mhm.
I'm just throwing out a number. Let's say you're paying in $1,500 a month every month for estimated tax payments. That's $1,500 less a month you're going to have to pay on the back taxes. That's often the difference between paying all of the back taxes or none of the back taxes.
Mhm.
I have to tell you, I had a guy several years ago and he refused to make estimated tax payments. If he would have paid $1,000 a month, he would have gotten rid of 50 to 60,000 in back taxes, but he refused, and he wouldn't have paid a dime on it. And
Wow.
so he became so disgruntled. Him and his wife were going to get a divorce. And so, unless you waive a conflict of interest, you consent to us working for both of you separately and knowing that you're going to have two different results. One person may pay a lot of it, the other not. You can't represent both parties. So we represent the woman. We were going to file an innocent spouse, but the collection, and here's the biggest mistake he made. And we don't have access to his information, but it mirrors his wife, and we have a power of attorney for her, so we could get her stuff. And so the biggest mistake he made was some of these balances were going to fall off the books in a year. He went in and he's paying all of it, which is good from her standpoint because she doesn't have to pay a dime.
Mhm.
But still, he could have just run out the clock and saved him all this money. And this is what happens when people think they can do this on their own. They think they don't need the services of a professional. They think they can save themselves money by not hiring me or somebody else. And, you pay the price for doing that. I tell people, you trying to do this on your own is like me trying to do heart surgery. And the other thing is, don't try to hire somebody on the basis of price. If you had heart problems, you wouldn't care what that heart surgeon cost. Well, that's the same thing with a practitioner. And in fact, guess what? You're going to get what you pay for, because there's a lot of people out there that cut rate their prices. I see it all the time, because then they come to me and I go, you were never going to get an offer because you got all this money sitting in your retirement account. But they just took it to get some money. And, we would, if we don't think the client has a great chance of getting an offer and compromise accepted, we're not going to do it.
You were talking about estimated tax planning. Like, how does that actually work to help people stay on track?
Well, here's the biggest thing. And I've got to tell you, Heidi, realtors have 4 times the national average of tax problems, because they get a big commission in the first month of the quarter. They get nothing in the second or third month of the quarter. The tax becomes due. They've spent all the money. So I tell realtors, when you get that commission, send 20 to 25% right away to Uncle Sam. There's nothing magical about paying at the end of the quarter. Uncle Sam will take your money at any time. And so that's the way we get realtors back on track. It's the same thing with people in who are self-employed in other businesses. Pay that. I tell them, pay it monthly. And during the time we represent you, you can send us the check. If you don't want to pay it electronically, we'll send it in to the IRS by certified mail. That way, you don't have to worry about coming up with all this money at the end of the quarter, because it's human nature just to spend the money. The other thing is, people say, well, I set it aside in a bank account. Well, the problem is that's subject to seizure by the IRS, and you're not getting any credit for making the estimated tax payments. So why not just pay it in monthly instead of putting that money into a bank account? Because now it's already there for the IRS, and that's how you stay compliant, is by making those estimated tax payments. I say no less than on a monthly basis.
Oh, wow, I've seen the quarterly estimated, but you saying monthly, I've never heard that before. That's
Well, you don't have to say, it's they're not due at the end of that month. They're due at the end of the quarter. But I'm suggesting pay people, make sure the check's notated properly. So for now, we're in the third quarter of 2025. Make sure it says that for those payroll taxes or whatever it is, or they're going to apply it to the back taxes. So you got to make sure the check is notated properly. But yeah, send it in. You can send payments in anytime. So send them in before the end of the quarter, because if you wait till then, you may not have the money.
they'll always take your money, right?
That's right. They'll always take your money.
So then, are there specific tools, services, or advisors that help people rebuild their tax lives while in an installment plan? Or I actually don't know what this is, the offer and compromise.
Well, if you have tax liability, an offer in compromise, most people want that, because once you send that in, and you settle for less than the full amount, it's very formulaic. It's based upon your net equity and assets and the difference between your income and your expenses on a monthly basis. Uh, but people love that, because once you fulfill the terms of the offer, the liability goes away. One of the conditions, though, is that you're compliant for 5 years, or it's all going to come back. So I'm a little hesitant to recommend that to people that have a long history of non-compliance. But the other thing is because it's based on net equity and assets, in the Nashville area, we're finding out that 98% of our clients, give or take a percent or two, are not eligible for an offer in compromise, Heidi, because And maybe you know this and maybe you don't. You know, Nashville is now the place to be in the Midwest. And,
Wow.
and so people are coming in from California paying 200,000 more than the listed price. It drives the locals nuts. And so the real estate, the value of their homes is skyrocketing. And guess what? The IRS, if you're going to submit an offer in compromise, will take into consideration your net equity in that home. And so people can have $500,000 or more net equity in their home, and that knocks them out of the offer because their net equity is more than what the tax liability is to the IRS. So, you know, it's a great tool. Unfortunately, not everybody qualifies for it, and some people don't understand that. They think, well, you should be able to do this. Well, you know, you got to play the game by the rules. I can't make up the rules, and I'm not going to manufacture numbers for the IRS. We get great results, but we are not going to manufacture numbers on behalf of our clients for the IRS. Sorry about that, Heidi.
No, 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 you're okay. I was gonna say you're not a magician, you could do your best, but, there's no magic. It's all it
Well,
all
and
comes
I
together
tell
with
a lot of people in the initial consult, I said, this is not going to go away overnight. Just because you pay me the big bucks is I don't wave a magic wand and it goes all away. It's a lot of work. It's a lot of work for you. It's a lot of work for us to prove to the IRS that you don't have the ability to pay all this back, which is why I work every Saturday and Sunday morning. You know, if I could just call them up and say, "Hey, I'm Monty Hall, let's make a deal," I'd be in the Caribbean.
So, I mean, in general, then what are some smart habits people can build? You were talking about that monthly payment, but avoid falling behind, avoid feeling that stuck, feeling, especially if they've been struggling for years.
Well, one of the things that you have to do is you have to make sure that you have enough withholdings taken out of your paycheck. That's the other things. I have more people, probably 70% of my clientele is self employed because the taxes aren't automatically taken out. They are for wage earners. But a lot of people don't have enough withheld. And if that's true, then they're going to have tax liability. So I tell them go to your HR department, go to your payroll department, find out how much you need to take out, but don't take too much out because if you have tax liability and you get a refund at the end of the year, guess what? You're not getting that refund. That refund is going to pay your back tax liability. So the best thing you can do is to make sure, whether you're self employed or a wage earner, that you've got sufficient taxes going into the IRS on an ongoing basis.
So it's just like a wage earner you're saying is if you do that monthly, estimated tax payment, if you pay too much, you're gonna get it refunded back.
Right. Well, they're not making an estimated tax payment. That's for the self employed. But the
Oh,
wage earner, he has the withholding.
yeah,
He
yeah.
just needs to increase his withholding if he's not having enough withheld to avoid any tax liability with the IRS.
Very interesting, very interesting. Well, thank you so much. Do you have any other advice for anyone that's in tax trouble right now?
Well, give us a call because we've helped thousands of people over the years. Like I said earlier, 85 to 90% of our clients never pay back the full amount. You know, if you try to do this on your own, the IRS is going to spit you out because they will take advantage of you. You won't even know it. You need a seasoned professional. So call us or go to lancedrurylaw.com and see what we can do for you.
Well, yeah, I'm gonna reiterate the fact here as well because, if I have problems, I'm coming to you. Are you in Pennsylvania?
We can be. We're representing a guy out of Yonkers, New York now. We don't advertise there. But one of my old clients, and when he told me the name, I didn't recognize the name, but he said, he told me to go to you because you took care of me years ago.
Oh, that's amazing. That's amazing. Well, thank you as always, Lance. And thanks for tuning in to Resilience and Resolve. If you're overwhelmed, behind, and ready for a way to move forward, visit lancedrurylaw.com. Lance and his team are here to help break you from that cycle for good. And as always, like, subscribe, and leave us a review. if you found today's episode helpful. Thank you so much, Lance.
Thank you, Heidi. Always good to see you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.